You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 27th day of February, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That one's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step exactly how to take the trial. It'll take you about all of 3 minutes. And then we'll get your indicators up and indicating today. You'll have access to them over the weekend. Your trial will officially start Sunday night at 6 p.m. Eastern and will run all the way through next Friday afternoon at 5 p.m. Eastern. The weekends don't count against you. It's 5 consecutive trading days, and there's no credit card required. We want you focused on what's being taught, so at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when you take the trial, yes, you do gain access to the live training room, 2 hours, every trading day for 5 consecutive trading days. But you also gain access to everything else we do the other 22 hours of the day. Unlike the stock market, the futures market trades around the clock. Now, everything we do can be applied to futures, to stocks, to crypto, to Forex, to ETFs. Price flows the same across all markets and all time frames. I'll get into that more a little later in the broadcast. So get yourself signed up for the trial today if you've not yet taken it. Get your indicators up and indicating today. And then Sunday night at 6 p.m. Eastern, you will have access to the logic alerts, the concierge trade alerts, and then Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. And then the live training room opens at 9:30 a.m. Eastern on Monday. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only got to do it once. Go to mytradingiq.com. Scroll down the page to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What'll happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is just click the link in the email, and it automatically logs you into our platform. The benefit there is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, but you still want to join live. And there will be days when you're busy, so you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it is a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. As I mentioned, Michael will be joining us at the top of the hour, 1 p.m. Eastern. Not only will he show you how to take the 1-week free trial, he'll also provide us with a recap of everything that happened this morning in the live training room, and then do a little live trading as time and the markets permit. Right now, we'll dive into our daily devotional, which is where we start each and every day. The topic of the devotion that we're in right now is, God, where are you? Today's scripture is Joshua 2, verses 11 through 14, and I'll share it with you from the NIV translation. When we heard of it, our hearts melted in fear, and everyone's courage failed because of you. For the Lord your God is God in heaven above and on the earth below. Now then, please swear to me by the Lord that you will show kindness to my family, because I have shown kindness to you. Give me a sure sign that you will spare the lives of my father and mother, my brothers and sisters, all who belong to them, and that you will save us from death. Our lives for your lives, the men assured her. If you don't tell what we are doing, we will treat you kindly and faithfully when the Lord gives us the land. Again, that was Joshua 2, verses 11 through 14. Stand by, we have technical difficulty. Friday feeling like a Monday. Here, let me try this. See what happens. Probably nothing, but worth a shot. All right, looks like my devotional program is not going to work for us today. I'd love to say I was surprised, but guess I'm not. Yep. All right, let me give you the numbers from around the world then. How about that? See if that works. Yeah, it looks like that ain't happening either. Everything was working smooth as silk a little bit earlier. And now it's not. It's quite something. All right, looks like I can at least give you the numbers from around the world. Starting here in the U.S., not a pretty picture. The Dow down 637 points. That's over 1.25%. NASDAQ down 222 points, almost 1%. S&P 500 down 45. And the Russell 2000, a man in the street, down 50 points, almost 2%. That's a big deal. In the commodity basket, crude oil's up $1.40, trading 66.61 last. That's a gain of almost 2.25%. Gold's up $55, trading $5,249.20 last. That's a gain of just over 1%. Silver up $6.28. trading 93.28 last. That's a gain of 7.25%. In the Asian markets at the close, the Nikkei posted a gain of 96 points. Shanghai rose 16. The Hang Seng gained 249. That's almost 1%. And in the European markets at the close, FTSE up 63, the DAX down 4, the CAC down 40. So we had a green day in Asia. It was a mixed day for the UK. But here at home in the US of A, it is a big red Radio Friday. All right, I'll jump back over here, see if things calm down. I don't think they did, but we'll take a look anyway. All right, we'll try this. We'll hit the magic button. Going once, going twice, going 3 times. And what do you know? All right. I already gave you the scripture. Here's the devotion. The walls of Jericho were massive. Archaeological evidence suggests they were 12 feet thick and 25 feet high. But the most impenetrable barrier wasn't made of stone. It was the wall between the holy God of Israel and the Canaanite people. Rahab lived literally within Jericho's walls, her house built into the fortifications themselves. As a prostitute in a pagan city, she was doubly separated from the God of Abraham, Isaac, and Jacob. Yet, when Israeli spies arrived to scout the city marked for destruction, something extraordinary happened. In Joshua 2:9, we read, "I know that the Lord has given you this land, and that a great fear of you has fallen on us." Rahab told this to the spies who came to her house. Rahab, now remember, she's the prostitute in a pagan city, had heard the stories about the Red Sea parting, entire armies defeated, kingdoms conquered. While her neighbors trembled in terror, Rahab saw something different: the hand of the one true God, and she risked her life to hide his people. Hiding enemy spies was treason, punishable by death. Yet Rahab chose to trust in Israel's God rather than her own people's gods. She declared in Joshua 2:11, "The Lord your God is God in heaven above and on earth below." Her confession of faith was clearer than many Israelites could articulate. The spies gave Rahab a scarlet cord to hang from her window, a sign that would spare her family when judgment came. When Jericho's mighty walls collapsed with a thunderous roar, Rahab and her family were spared. Rahab's story didn't end with survival. She married into Israel, and Matthew's genealogy reveals a stunning truth. This former Canaanite prostitute became an ancestor of King David and ultimately of Jesus Christ himself. The woman, once separated from God by the thickest possible barriers, was woven directly into the lineage of the Messiah. So, think about this. In your own life, what walls seem too thick for God's grace to penetrate in your life? What barriers feel too high to climb? Rahab's story declares that no wall, whether built of stone, sin, race, class, nationality, or reputation, can withstand the power of faith. God's salvation can reach anyone, anywhere, anytime, transforming outcasts into ancestors. The same God who brought down Jericho's walls is still in the business of breaking through impossible barriers today. Anthropic has until this evening to meet the terms of use demands by the Defense Department. If not, the artificial intelligence company risks losing its contract and being labeled a supply chain risk. Last year, the Pentagon granted Anthropic a $200 million contract to develop tools for the military. Since then, the U.S. reportedly relied on Anthropic's large language model, Claude, in its raid to capture Nicolas Maduro in Venezuela. Anthropic has pushed for guarantees that Claude will not be used for autonomous weapons or domestic surveillance. In response, the Pentagon says it will use the tool lawfully and has threatened to invoke the Defense Production Act to compel Anthropic to remove guardrails. The Pentagon has reached out to Boeing and Lockheed Martin to assess their use of Anthropic. A supply chain risk designation would force those and other companies to choose between doing business with Anthropic and the U.S. military. The designation is typically reserved for foreign entities working with U.S. adversaries. The 10 people who opened fire on Cuban soldiers from a Florida-registered speedboat this week were Cuban nationals living in the U.S., according to the Cuban government. 4 passengers were killed and 6 were wounded. 1 Cuban soldier was also wounded. Cuban officials claimed most of the 7 passengers identified have criminal histories, and 2 were wanted in connection with terrorism. 1 passenger lived in the U.S. for over 2 decades and was committed to freeing Cuba from its communist government, according to his brother. Another had called for regime change in an interview with a U.S.-based news outlet last year. As of this writing, the U.S. has confirmed that at least 2 U.S. citizens and 1 U.S. visa holder were aboard the boat. Separately, the U.S. on Wednesday eased an embargo imposed last month, now allowing Venezuelan oil sales to Cuba's private sector. Sales to the government and military remain sanctioned as the U.S. pushes for political reform. So everybody was screaming for the Epstein files, and now they got him, and here comes the fallout. Far-reaching. The Justice Department yesterday denied allegations that it intentionally withheld files related to President Trump and the recent release of Jeffrey Epstein records mandated by federal law. The materials in question include reported FBI memos from 2019 interviews about a woman's alleged claims that she was sexually assaulted decades earlier by Epstein and Trump when she was a minor. It only took her 20 years to come forward. An FBI index reportedly shows 4 interview summaries were created, but only 1 has been released. DOJ officials say the remaining documents are being withheld under laws protecting victims' identities and ongoing investigations, not for political reasons. Then just redact the names. Pretty simple. Democrats on the House Oversight Committee say the gaps suggest illegal withholding. The woman later joined and withdrew a lawsuit against Epstein's estate and was denied compensation from a victim's fund. Well. Separately, former Secretary of State and all-around fun gal Hillary Clinton told lawmakers yesterday she was unaware of crimes committed by Epstein or his associate, Ghislaine Maxwell. Former President Bill Clinton is appearing before the committee today. Now, we know that President Clinton is not all he once was. So at what point do you say, oh, like Joe Biden, he was fit to be president, but after the investigation into him, he was found not fit. He was not fit to stand trial, but he was fit to be president of the United States. OMG. Really? That's your tax dollars at work, friend. From Reuters, OpenAI said today it is raising $110 billion in a blockbuster funding round that would value ChatGPT the ChatGPT maker, at $840 billion in a deal that signals the feverish pace of investment in artificial intelligence. The funding round, one of the largest private capital raises on record, includes a $30 billion investment from SoftBank, $30 billion from NVIDIA, and $50 billion from Amazon. And don't forget, the OpenAI mega IPO is expected to come later this year. Be sure to get your shares. Like you could. Yeah. No, that's for the big boys. Us ordinary citizens, we don't get to participate in that stuff. From Bloomberg, U.S. bonds are wrapping up their best monthly performance in a year against a backdrop of rising global risks, with resurgent demand serving as proof that investors still see treasuries as the premier haven in turbulent times. During a month when warning signs flashed alarms in other markets, from real-world evidence of the disruptive and potentially disinflationary power of artificial intelligence, to rising geopolitical tensions and worries about hidden dangers in private credit, traders flocked to U.S. government debt. Wonder how they'll feel about that 6 months from now. We'll keep you posted. Oil rallied as traders braced for any escalation of U.S.-Iran tensions heading into the weekend, with a massive deployment of American forces sitting in the Middle East, keeping the markets on edge. This weekend, it could happen. After 3 days, no deal with Iran. So, yeah, President Trump is not one to make empty threats. In fact, he's repeatedly said again and again, I really want to solve this issue diplomatically. We all knew that wasn't going to happen because Iran told us before the peace talks began, we're not going to agree to this crap. Now, the people of Iran, they hate their government with a passion. Thousands of them have been massacred in the streets. And the ones that survived being shot in the streets were shot in their hospital beds. How do we allow this to continue? Because we're afraid of Russia or China, Iran's best buds? No. We'll see. We'll see what Trump does and how he does it. Should be interesting. Paramount Skydance finally clinched its deal for Warner Brothers Discovery, outmaneuvering its rival Netflix after a months-long battle by agreeing to pay $111 billion for the legendary Hollywood studio. The victory for Paramount CEO David Ellison was hard-won, requiring multiple bids over more than 5 months, visits to Washington, meetings with shareholders, President Trump, and the personal backing of his billionaire father, Larry Ellison. Netflix bowed out of its $82.7 billion offer for Warner Brothers studio and streaming business yesterday after the board declared a recent Hail Mary bid from Paramount for the whole company was superior. The dramatic 11th hour turnaround gives the Ellison family control of one of the most powerful media empires in the world, uniting 2 Hollywood studios behind legendary films, the 2 major news networks, CNN and CBS, and of course the streaming powerhouse, HBO, and dozens of cable networks. Guess what, guys? This is not good news. And I'm not talking about from an investment perspective. I'm talking about the narrative. The narrative that you're going to hear everywhere you turn. Except a couple places. There actually are a couple places where you can actually get the truth. Last, in New York, a brutal cold snap has gripped New York City and much of the East Coast, freezing streets, sidewalks, and it seems any remaining sense of civic restraint. In Washington Square Park, a group of adults began hurling snowballs and other objects at responding officers from the New York City Police Department. This was not playful roughhousing in a winter storm. Video shows grown men and women, some masked, some standing brazenly in the open, all apparently confident the consequences would be minimal, pelting officers as they arrived on scene. That confidence is the problem. Assaulting police officers is not a prank. It is not political theater. It is a crime. Every individual captured on video throwing objects at officers should be identified, arrested, and charged accordingly. Attack a cop, go to jail is not a radical slogan. It's not a bumper sticker. It's the law. It's the bare minimum required to maintain any functioning city anywhere in the world. New York City Police Commissioner Jessica Tisch responded swiftly, calling the conduct disgraceful and criminal, and confirming that detectives are investigating. The city's largest police union, the Patrolmen's Benevolent Association, issued a sharper warning. Officers were treated for injuries, but the matter cannot end there. Those responsible must be identified and charged, and city leaders must condemn the attack unequivocally. That last point there is key. Public attitudes toward law enforcement do not form in a vacuum. They are shaped in no small part by the rhetoric of elected officials. When political figures spend years portraying police as inherently suspect or malign, it should surprise no one when segments of the public begin treating officers as legitimate targets. Consider New York City's mayor, Zohran Mamdani. Long before taking office, he built a reputation as a sharp critic of policing practices. Words matter. Tone matters. The cumulative effect of constant denunciation is cultural erosion, an environment in which hostility towards police feels permissible, even fashionable. We've seen versions of this before. Ferguson, Missouri in 2014, the 2020 wave of anti-police protest. The list goes on. Where does Mamdani stand on this? Hey, kids will be kids, and when it snows, there's snowball fights. Well, a snowball is one thing. What happens when a snowball hits you? It explodes into powder, right? But when you have massive chunks of ice thrown at someone's head, then it's a different story. What we have going on in New York City right now is simply a microcosm of a much greater cancer that is growing in America right now as we speak. And until somebody steps up and does something, it's only going to get worse, and it's only going to spread. That's what malignant tumors do. But that'd be the world we live in. So let's take a look. Logic 247, our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, and silver. We're currently in week 395. Over the last 395 weeks, we've issued over 21,600 individual handcrafted alerts. We crossed that 600 mark last night. 21,600 plus. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based simply on market structure and a simple process we teach all of our passport holders. This week, we've issued a total of 52 Logic 247 alerts. One never triggered, and at the time Valerie did the recap this morning, 6:30 a.m. Eastern, we were still waiting on the outcome of 10. I will assume that some of those have probably changed at this point, and Valerie will update and finalize the recap for the week this afternoon, evening, at the latest tomorrow morning. And then, of course, it'll be posted. It becomes a matter of public record. It is, each day, day by day. So, with 52 issued, one never triggered, and 10 waiting, that gave us 41 actionable alerts, of which 5 or 12% would have been stopped out, again, just based on market structure and the simple process we teach all of our passport holders. So, thank you, Lord, for another good week. Purpose of the logic alerts is to help you learn how to read a chart. If you never trade a logic alert, you might want to use them to learn how to read the chart. Because if you can't read the chart, chances of becoming a trader are pretty slim. Now, 395 weeks is a long time, 7.5 years. But many years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. They're different in a lot of different ways, but for the purpose of this discussion, I'll just say this. They don't come out around the clock like the logic alerts. The CTAs are published as a static report shortly after the Globex, or shortly before the Globex open each evening. The Friday session we're in right now began last night at 6 p.m. Eastern. But 5 minutes before the market opened last night, all of our traders had all of these targets. The ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at the charts. We'll start where we always do, with the bellwether, the S&P 500 E-mini futures. Now, last night during the members only workshop, I did what I've been discussing doing for some time. I redid the fib extensions. In the discussion group and the trial discussion group, I posted a chart with the numbers of the previous fib extension prices, because they're still going to come into play for some time. But these are the new ones, okay? We've connected this significant low to the all-time historic high to this deep retracement low. So where are we today? We're sitting right on top of the 24% fib extension. Now, if we go back to Wednesday, 50% fib extension. That crown of thorns I've talked about, right at the 50%. Now these are the new fib extensions. But important prices, important areas are just that. We see it here. Now we're seeing it here. Had I done the fib extensions sooner, look at this 24. Support, 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 support. Okay. Now, price always reverts to the mean. In our case, the mean is green. It's called the BBC. It just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices, higher prices. You get the idea. Now, take a look at this high put in back in October 30th, and this low put in November 21st. You got a high, you got a low, and what's happened since then? We're now at the end of February, entering March, the third month of the year. We've basically gone sideways. We had more directional movement from early September to the end of October than we've seen since then. Yes, we've gone up. Yes, we've gone down. But in the grand scheme of things, we've gone sideways. Now, this is often what a transitioning market looks like. We've had a market on fire for some time, but it may not be too far in the distant future that I have to take down, because Our inability to get to a 24% fib retracement and hold the retracement is spectacular, okay? But the 24 is the shallowest possible fib retracement. So this thing's coiling up. I don't think it's coiling up to make this incredible move higher. Maybe I'm wrong. I own that. But you may hear me saying in the coming weeks and months that, okay, we're taking down the fibs and putting up reverse fibs. See, in an uptrend, you draw your fibs from the low to the high. But in a downtrend, you draw your fibs from the high to the low. Same with fib extensions. You just reverse. Okay? So, we can't argue that the downtrend has actually begun. We need to take out this double bottom, take out this 24, and then that's probably when I will put the reverse fibs up. So, stay tuned. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose many years ago, and I've stuck with it. The vertical line here separates today Friday from yesterday Thursday, and back over here is Wednesday. And if we keep going back, there's Tuesday and Monday, as you can see. The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a weekly zone, we expect resistance until proven otherwise. Last night, we had a slight gap lower open, and in the very first 30 minutes, we ran to the short target. This candle opened at 68.99 and dropped 17 points to the target, to the tick. The short target, simply based off this. See where red turned to blue? We hit it. Not only did we drop 17 points, we bounced about 15, and then we came back down another 17 points and hit it again. 16 points. That one didn't quite touch it. Now, support will always send the market looking for resistance. As I said, price always reverts to the mean. The pullback to the BBC holds more often than it doesn't. Whether you're pulling down from above or pulling up from below, the pullback holds more often than it doesn't. But eventually, it will trade through. Okay? And as it traded through, we found our support where? At the zone, 68.74/75. As we bounced off support at the short target, we hit the weekly zone, 69.03/04. One of three things happens when price encounters a weekly zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time, the slice. So, here's the dot. Support, resistance to support, back to resistance, consolidation, and then another drop to the short target. And then we hit the zone and bounced back up to the underside of the short target. When price trades through a CTA on the retracement. In this case, a short CTA, the underside will often become resistance. Over here support, over here resistance, and over here resistance. So this low that we put in here this was a spike that right here, where blue turned to red, buyers came in just a tad early and drove price back up to the BBC. Once, twice, 3 times, no, 4 times. 1, 2, 3, 4. I guess the pullback held. But while that was happening, look what happened down here. You see on their way down, the black step line and red and falling were running parallel to one another. But at this point right here, the black step line crossed red and falling. So now the black step line is on the right side of red and falling versus on the left side. When that happens, you should expect price to retrace to the BBC. And it did. Also, red and falling turned to blue and climbing. Red and falling is bearish. Blue and climbing is bullish. So now we're sitting right on top of support, blue and climbing. Now, we don't have a lot of blue there. The more blue you have, the greater the potential that it's going to hold. So, got to be patient. You want to see price get down into this area, 68.57. You could trade that down to 68.54. Be a nice 3-point trade. Then if we get to this area, 68.50, a nice trade down to 68.42, 8 points. Okay, it's all just simple market structure. On the Dow, this was the opening candle last night, and we hit the short target in the first 30 minutes. Support sends the market looking for resistance. When price rallies up to a zone, we expect resistance till proven otherwise. Just like we saw here yesterday, and just like we saw here. And let me remind you, these are the zones that were published Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. From resistance at the zone yesterday to support at the zone yesterday. Now, last night we opened, hit the short target, bounced back up to the zone, resistance, blue and climbing, turns to red and falling, takes us all the way down to the next zone where we consolidated. And on the third candle, we had some green here. Okay. This was the 9:30 open on Wall Street. We had some green, but look where the candle closed. If you want to know why, just go look left. Support sends us to resistance at the zone. Remember, that's what we expect until proven otherwise. Now, the black step line has crossed red and fallen. So the attempt to get back to the BBC failed. That in and of itself is a sign of weakness. So I will look for price to take out this low, and then based upon what I see over here, we've still got one more zone below, down at 48,130/135. On the Russell, here's the gap lower open last night, and by 7:30, yeah, we made it to the short target to the tick. See where red turned to blue? There you go. Market structure. No magic, no voodoo, just market structure. Support sends the market to resistance. Resistance sends the market to support. Support sends the market to resistance. Weekly trading zone. Consolidation. 4 candles there. Then we get below the BBC and we hit the short target again. We finally trade through the short target. Consolidate a little bit here at this zone, and then we go practically zone to zone on the Wall Street opening 30 minutes. We ran up to red and falling resistance. We had a green candle. It reversed, and down we go, and here's where it closed. Now, the zone published Monday morning is 2617/2618. The low is 2618.2. Probably just got lucky. Gave us a nice bounce, and here we sit. The step line has crossed red and falling, so could we see a retracement back to the BBC? Yeah. Price always reverts to the mean. Maybe it comes down to test the zone first. Or maybe it slowly starts to work its way back up. Time will tell. On the NQ, here's where we open. Found support at the weekly zone. Bounced us up to the BBC. Pulled back holes more often than not. Resistance sent us to support at the zone, 85/86. And we caught another bounce. And as you can see, this high right here aligns with this high right here. Simple market structure. Okay. Then blue and climbing turns to red and falling. Takes us down to the zone where we consolidate. And then takes us down to the short target. Get a little bounce. And then we trade through the short target. And find support at the zone published Monday morning, 799/800. And that sends us all the way back up to the BBC and the weekly trading zone. That's called resistance times 2. Now, where did the market find support? At blue and climbing and the short target. Again, the short target. So this candle found support at blue and climbing, and this candle found support at blue and climbing. So right now, price is a bit trapped. You got resistance times 2 overhead, and you've got support here. Now, this area right here where the black step line crossed, 24,876, that's potential support. And then you've got the zone. Okay, and those wicks sticking up in the air like that, okay, those are failed attempts. Now, institutional traders who move price, they're only going to spend so much money trying to move the market in the direction they want it to go, and then guess what? They're going to hit pause on the buy side. It takes financial commitment for prices to rise, but not for prices to fall. So the path of least resistance is always down because it does not require financial commitment. So this looks pretty bearish to me. All right, Michael's here. He'll give us a recap of what happened in the live training room this morning, and then do some live trading on the TradingView platform as time and the markets permit. When he's done, I'll come back. I'll finish the recap and close things out for the week with our good word for the day.
Excellent. Excellent. Here we go. Ready. Put that there, that there, that there. See who is watching right now.
All right, looks good.
Good. All right, so how do things go? We're in a break here. Well, let me do the first part of it and then we'll go check that. Good afternoon, everyone. Today is Friday, the 27th day of February, 27th and final business day of February 2026 already. If you have not taken a free trial with us, go to mytradingaq.com, click on the purple button. There's no credit card required for this trial. Just click on that purple button. And, it will bring you, make sure this worked. It'll bring you to this page right here where all we ask for is your name, your email, and your phone number. Down at the bottom gives you TradingView login ID. Okay, click the register button, and once you hit that register button, we'll be sent everything that you put in there, so we'll know that you took the trial. We'll be able to get your indicators indicating for you. Okay. Today we had a rough day trading today. A lot of people had rough day trading today. At the halfway point today, we're only up $135 or something like that per contract. Once things slowed down, it got better. Once things slowed down in the afternoon. But it wasn't easy. Okay, so looking at this is the final day of February 2026. If you're going to read the spreadsheet, I think I said the spreadsheet, but I got to say it. You got to read all the CFTC risk disclosures down at the bottom. Today we made 72 ticks on the NQ, 77 on the Russell, 11 on the YM, and we lost 3 on the ES. Now this was the high of the day on the ES. This was the high of the day on the Russell. This was the high of the day on the NQ. This was not the high of the day on the YM. We stopped out, I think, on our last trade on the YM. That put us at 762.5 on the morning session. Today it took 9 minutes and 7 trades to get to $105 with 1 contract or $1,050 with 10. We took 52 trades this morning with 9 stop outs. And we had a couple of stop outs right in the beginning. The ES was, I mean, we never got positive on the ES all day. We're negative on the ES all day. That's the high right there, was -3. So 82.6% of our trades are break even and red this morning. So we're going to end the month of February with $21,227 over 19 business days, averaging $1,117 per day. That's below my $1,200 mark that I like to have. And on the year now, we're at $44,252 over 37 days, averaging $1,196, again, below that $1,200 mark I like to have. $1,196 per contract for a 2-hour day. And this went down because, again, it took us a little extra time and we didn't get a little extra money. We got just the right amount, $5 extra. Following the 24/20 blueprint, if you were to quit trading when you got the goal for the day, so far this year you'd worked 4 hours now, and you'd be up to $8,632 if you did everything exactly like I did. You'd be trading 2 contracts now. We did make enough this month to be able to go to another contract, right? We needed to make $4,000, $2,000 per contract. We got up to 6,100. So starting Monday, we'll be figuring on 3 contracts. I'll be trading 10, but we'll be figuring on 3 contracts. So we're averaging $2,114 per hour trading. Okay. Now there are a ton of trades to go over. Let's just see what we got going on here. My trigger broke. Now, if you ever get this, we get the exclamation point like that, just shut it off and turn it back on. Okay. That usually fixes it right away. If it was working, you get the exclamation point. If you get the exclamation point and it never worked, well, then you don't have it enabled, likely. All right. So looking through this right now, we had a ton of trades this morning, but it slowed down toward the end of the session. So I just want to make sure we get what trades we can get right now. We'll start out with the Russell and go all the way back to the beginning on this guy. All right. So on the Russell, our very first trade on the Russell was plus 14. Then we got one more plus 15. Then we had from 15, we went to 26, 26 to 29, 29 to 30, 30 to 34. 20 to 30, 30 to 34, 34 to 37, 37 to 43, 43 to 44. Then we stopped out down to 29. Then back to 34, then 46. And from 46 we went to 56, then 67, then 75, and then 77. And that was it for the Russell. Okay, if we go all the way to the end right now on the Russell, we don't have a trade here yet. An up close followed by a down close to have a trade on the Russell right now. Okay. We'll go to just 2 like this, so we can do the YM pretty easily and watch the Russell. Let's see if we get a trade over there. I should get my DOMs ready to go here too. All right. Here we go. Let me just move a couple of these things around. Get my DOMs available. Okay, so down close right here on the Russell will be a short trade. Okay, on the Russell right now. On the YM, let's go through what we did on the YM today. Our first trade here on the YM, we picked up 11 ticks. The next trade, we picked up 5 more to get us to 16. Then we stopped out, went down to 1. Then we went to 2. Then we had a nice trade right there. We went to 22 on that trade. And from 22 on the YM, we stopped out. I'm sorry, we went to 22 on that trade. And we stopped out on this one. And that brought us down to 7. Then we went to 8. Then we went to 18. Then we went to 21. Then 26. And then we stopped out again, down to 11. And that was it. That's where we ended it. We stopped out down to 11. The Russell could still give us a trade right now. It's got to give a down close right here. There it is. Okay. And there it's starting to run. It just bumped my stop to break even. Lock in 3 ticks, 5 ticks. Okay. So that's 20. All right. And that was it on the Russell. Now, right here on the YM, we just about have a long trade. If we get an up close right now on the YM, it'll be a long trade. Okay, put my order on right now. And if we get an up close, it'll be a long trade. Oops. Okay, so let me just write that. And we'll get back to it in a minute. All right, there's the up close on the YM. So we just jumped on the YM. Here's that one. That window on top. Window on top. Okay, now we'll go to 3 markets down. The Russell was going down. The YM's giving us a long. I don't know which one's right, but we'll just trade what it says. Okay, every time I try to outthink it, it outthinks me back. So on the YM, I'm going to let that run itself out and do what it's going to do. Okay, it said, the chart said it was going to go up. We'll see. And it didn't. So that's a minus 15 on the YM. Okay. This is the ES. Now we never got positive on the ES. We started out with the stop out here with minus 10. A plus 2 there that got us to minus 8. Then we had a plus 6 that got us to minus 2. Then we stopped out again right there. Now I should add my stop to break even on that. That's why it's got the orange thing. But we stopped out again right there, and that put us at minus 12. Then we had a break even, and we stopped out again, put us at minus 22. Then I picked up 4 there to get us to 18, break even. Then 1 to get us to 17, 1 to get us to 16. Then we had a big trade there. We picked up 12 to get us down to minus 4. And at that point in the day, that was our high of the day. Then we stopped out again and put us at minus 14. Then I picked up 8 to get us to minus 6, and 1 to get us to minus 5, and Then there was one there that got us to -3, and that was it. This was our last trade right here. That was a break even. Okay. And that is what we did on the ES today. It was not easy to look at that huge move down there. Big 86 down to 58. Wow. That is a 28-point move. And how long did that take? 10 minutes. A 28-point move in 10 minutes. What happened? Did something happen? I don't know. I was in a medical supply store during the break. All right, we need a down close on the ES to have a trade now. Oops, I did that wrong. Okay, down close on the ES would give us a short right now. A down close on the Russell would also give us a short. Okay. And a down close on the NQ would also give us a short. So we have 3 shorts possibly setting up right here. One there, and one here. And we're on the NQ right now. There's the Russell short. The ES hasn't triggered yet, but the Russell has. And now the ES has 2, and the NQ just did 2. All right, so let's manage these for right now. Okay, let's go to +4 there, +5 there. And the ES is at break even right now, so we're going to go to +4 on the ES. We're +5 there, +4 on the ES. And the NQ, we're out with +4 on the ES. We're going to be out with +5 on that, and we're at +10 on the NQ. That should have given me 26, but I think it probably gave me about 24. I'll tell you in a minute. I better write it down. We had nothing on the YM. On the ES, +4, right? 4 ES, 5 on the Russell. And NQ, let me go see what we did get on the NQ. Okay, let me make sure I got that right. Yes, the ES was 4. The NQ was that's 23, that'd be 5. It's 22 ticks on the NQ. Okay, we only got 4 on the Russell. So here, let me write this down and let me just fill out the sheet right now because I'm going to screw this up. I'll just do it here. So right now, this is the NQ. What did I say we got on that? 22 ticks. Yeah, 22 ticks on the NQ. This is the Russell. We are now at 24 on the Russell. The YM, we are at -15. And the gold, nothing, but the ES, we're at 4. Okay, so we're at +2,050 right now. And this is day 55, 227. All the way over here. So far we have 1, 2, 3, 4, 5 trades, 1 stop out. And we haven't gotten the minute number yet, but I guess I'm using some of it right now. We'll copy that down to there. This should be 55. Okay. Better. Here are all those trades I can show you right now. Here they all are, right there. All the fills on those 3 trades. Okay. Let's see. Oh, I was going to go over the NQ with you, right, from the beginning. Right, let's just do the NQ all by itself. Go all the way back to the beginning on the NQ. Oddly, we did not have the most trades on the NQ today. The most trades we had was on the Russell. Actually, the Russell and ES were even with 16 trades each. All right, this is the NQ. Our first trade on the NQ, we picked up 9 ticks. Then the second trade, we picked up 10, got us to 19. Then we picked up 1, got us to 20. Then we stopped out, put us at minus 16. Then went from minus 16 to 7, so we must add a 9. Then went from 7 to 2. And then from 2 to 14, and 14 to 18. And this was a big one right here, 18 to 72. And that is what we ended up trading. We ended trading the NQ until just now. Just had that one trade in here a minute ago, right there. 22 ticks. And that's it. All right, that's where we are right now on the day. So if, hang on, let me get it ready here. Slide everything over. Do we have any markets ready to trade right now? No, nothing is in the overbought or news. All right, so if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page. Just fill it out. All right, fill it out. Let me get you going. Now let's get in there and start trading again. All right, so for right now, we have 13 minutes left. So we took a couple of minutes in between, so we'll just say 15 minutes today. So a couple of minutes. While I was doing all that, we're up $2,050 right now. Right, $2,050 with 10 contracts, or 205 with 1. So that is the goal for the day. Right now, twice the goal for the day. And we'll see if we can add to that. Gordon, are you in here right now? Gordon, you are in here right now. Okay. So what I was saying about this, you can make this be a 19 range like this, and then you got to flip your bracket to be the 19 range bracket. Okay. And the 19 range bracket is right here. If you go to mytradingiq.com, scroll down to right, you're going to be on the home page, right? Did I put it on the, oh, it's on the trade rules page. On the trade rules page, 19 has a 25 tick stop. I trailed to break even plus 4 ticks after 10 ticks in profit with the 45 tick target. Okay. Break even plus 4 ticks. So I think I created that for you. If you switch your bracket to a 19 range, I'm pretty sure I created that for you. Okay. So check that out and see. All right, and I'll trade that right now. I'll trade the 19 range right now with you. Bart. You must have left something on. All right, we took off all that other stuff that I put on the break-even button and all that stuff that was likely to screw you up last night, Bart. But we left the automated, the ATM strategy on, and that, as long as you let it do its thing and you don't go putting orders on individually, that should be fine. Okay, so what we're looking for right now on the 19 range, we are oversold. We need to close on or above the mid band, and we're not getting it. Okay. And how do you change my MDOM again? Click on trade. Go to attach trade window to chart and change your bracket with the drop down. Okay, that's all you have to do. How do you change it? That's what I just told you. You change the bracket on the DOM. You don't have, there's nothing else you have to do. You just change the bracket on the dot. Okay. All right, so right here, we need an up close on the Russell, followed by a down close. We're in the overbought already on the NQ. We need to hit the mid-band to give us a down close. The ES, we need an up close, followed by a down close, maybe 2 up closes, followed by a down close. The Russell needs the up close because we're not in the overbought. And we have 9 minutes. 9 minutes left. All right, the Russell just closed up. And so now we need a down close on the Russell. There it is on the Russell. I'm shorting the Russell right here. There it is. I'm short. Okay, 5 ticks in profit. The stop's going to go to +1. We ended up with nothing there, nothing there, and nothing here right now. One more. Get down there. One more. There it goes. Okay, I'm going to lock in 10 ticks. 15 ticks. That's 15, right? Yeah, it is. 16, 20. Okay, 20 more on the Russell. Who's in here? Which one's Russell? This guy. Okay, back here. We didn't end up with a trade on any of these. Okay, so let's just take a quick look here, Gordon, while we're looking at things. If you traded the 19 range all morning on this, I don't know what it would have looked like, but it probably would have been easier to trade. You know, I ended up with just +11 on it. But if you started out right here, your first trade would have been right there. That would have worked out fine. Your next trade would have been right there. That would have worked out fine. Your next trade would have been right. Next valid trade would have been right there. That gap down, that would have worked out fine. Your next trade would have been right there. That would have worked out fine. So far, every one of those would have worked out just fine. Now you flip over to the long side and right. Nope, that wouldn't have been a trade. Then you're back on the short side. This would have been your first trade that might have stopped you out to the tick right there. Might have stopped you out to the tick right there. Maybe because it's a 19 range. If you entered here at 57, 25 tick stop, yeah, you would have stopped out. So you'd had your first stop out right there. And then your next trade would have been this long right here. That would have worked out fine. This long here would have worked out fine. This short here would have been okay. This short here would have been okay. This short right here would have been okay. This short here would have been good. And this long right here would have been good. So one stop out with about 10 trades that would not have stopped out. Okay. And the Russell nailed you. It did really well on that one bar. Good. Good. Okay. Well, the Russell did have a short there a minute ago. Right there while I was showing that to Gordon. We got that one. We didn't get that one. And we didn't get that one. Okay. Now we need a down close here on the ES. We can. You know, on really, really volatile days like today was, we can. Down close here on the NQ, the down close there on the ES. The NQ just bumped my stop to +10. The ES, I think, is going to go to break even. I don't know what I have on this yet. Okay. Are we in this? Did it fill us? It didn't fill us. Oh, it did. Okay. What the heck did I just do? Oops. I think I moved my order way down there. I'm just going to go to break even on this. So I screwed it up. Take 4. All I really messed that order up. The Russells, I mean, the ES is working. The ES is working fine. Go to +4 on the ES. I thought I was in that trade, and I thought I was moving my stop, and I was actually moving my entry. +8 on the ES. That's 11 on the ES. Okay, so I ended up getting 4 out of that and 11 out of that. That puts this at 15. And this at 26. And this at 8. Okay, so 87% of our trades now are break-even or better. And it's 1:26, 3.5 minutes left. So I'll keep it that way, Gordon, on Monday. All right, we'll stick on the 19 range on Monday morning. I'll save this right now. Right, because 9 range was kicking my butt this morning too on the YM. Well, didn't really kick my butt, but I do have 2 stop outs. And it wasn't easy to trade. Now the Russell, we had 16 trades on the Russell. Could have probably gone to a 19 range on the Russell too. That might be something to think about, you know. The market's as volatile as they have been. Above or below the yellow and the down. You mean getting the drop? Getting the drop like right here if I want to go short. Right here if I want to go long. When it's moving quickly, that's what I'm doing. But if it's not moving quickly and I'm able to put in a buy stop or sell stop order on it, then that's what I'm going to do. Okay. Okay, we have just a couple of minutes left here. Paul's not in here, is he? Paul M is not in here. Okay. We need an up close followed by a down close on the Russell. We're not going to have a trade here. We need a down close. It's got to go straight down right now. Russell anymore. It's not going to be any good. It's got to go straight down. Nope, it just went up 1 too many ticks. The NQ could give us a trade though on a down close. Watch the NQ 10 points from the top of the bar. Okay, 94.50 down to 84.50 on the NQ. The ES could give us a trade as long as it doesn't close up. No, it's too high. 60.50 down to, that's too high. 58.50. Oh, now it's too high for sure. All right, now they're all too high. Just cancel all those orders. They're all too high now. It's going to get you in. It's not necessarily going to give you a great fill all the time. But, you know, when the markets are moving really fast and I have a lot of them going on at once, that's how I usually do it. You know, at the end of the morning session today, where the markets are moving a little slower, I could put buy stop limits and sell stop limits on. But then they got fast again. In this session right here, they got fast again. And I don't even know where we're at now in profit on this session, but I know it's pretty good. It's probably about half in the 15 minutes, 13 minutes, whatever it was that we had. It's probably about half of what we did in 2 hours this morning with way fewer trades. You know, a fifth of the trades, half of the money. This looks like it's going to give us a long trade, doesn't it? But it's not. Oh, we ran out of time, guys. Okay, so let's see how we did in this session. We're up 46.25. So this morning we were at, so that's $462.50. And this morning with one contract. And this morning we're at 762. So we did more than 50% of what we did this morning in 15 minutes in 8 trades, compared to 2 hours 52 trades this morning. You just never know. These afternoon sessions, they tend to do pretty well. We tend to get pretty good results in these afternoon sessions. If I don't screw them up. This day I screwed something up, so I didn't have anything there. That day we just didn't have many trades. All right, so this is how we're going to end it. 26 ticks on the NQ, 44 ticks on the Russell, minus 15 on the YM, and plus 15 on the ES. This is at $4,625 in this session. 87.5% of our trades were break even or better. We had 8 trades with 1 stop out. Traded for 15 minutes. And in these sessions now, out of the 55 sessions we've kept track of, we are averaging $155 per contract in 13 minutes per session. So that's pretty good. Make you want to just do this. All right, that is. Now we stopped out on the Y. We stopped out on the YM before I changed it to the 19 range, right? I'm pretty sure. Yeah, we did. Then I changed it to the 19 range. Anyway, because if we didn't, then the YM stop out was 25 ticks. Let me just go look and see what that was. I'll be able to tell. I didn't take that many trades. Especially on the YM. I think I was right. Anyway, I'll get back to it. I've already run over it. It's Friday. If you have not taken a free trial with us, go here to mytradingiq.com, and click on the purple button. The purple button will bring you to this registration page where we ask for your name, your email, and your phone number. Down here at the bottom, gives you TradingView login ID. That's all we need. Okay, give us all that info, and we will get your indicators indicating on your desktop. That's it. All right. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. And there is Dwayne.
Okay, recap of the morning session.
Today, it took 9 minutes and 7 trades to get to $1,050 with 10 contracts, or 105 with 1.
Good job.
Thank you. Thank you very much.
Okay, guys, we'll pick up where we left off. Crude oil. We already talked about the reason why crude is up, obviously. These failed negotiations with Iran. We did hit the short target. This was the open last night, and by the 8 o'clock 30-minute candle, 8 p.m. Eastern, we had hit the short target. We consolidated there. Red and falling turned to blue and climbing. Got back to the zone above, consolidated a bit, and then we made a run all the way to the next zone. Got a retracement. The pull back to the BVC held. It holds more often than it doesn't. And then we ran right on up to the long target. Just simply based off right here. Blue turned to red. A little consolidation at the long target, and then we continued upward. A little consolidation at the next zone, and then we sliced through this zone. And if you look left, you'll find a reason for resistance. Got to go way low. And then what happens? We pull back to the BVC, and once again the pullback holds. Not only did the pullback hold, but this particular candle here, which was up against resistance at the weekly zone, we had a red candle right there, all the way down to the zone below. But by the time the 30-minute period was over, price had made it all the way back up to the zone overhead and closed green. The last candle, not the one we're on right now, but the last candle closed just barely above red and falling. Now, red and falling, of course, is potential resistance. So we need to take out this high. We need to take out these two highs. And then 67.15 up to $67.30, that's worth about $150 per contract traded. But be patient, because you've got potential resistance here and here. So give it a little room. 67.15, 67.30. And if it's a strong move, then you can let it run right on up to the zone. And if it blows through the zone, as it did over here, then be real careful up here. Okay? Because while the market loved everything it found, once we hit 67.83, not a single trader, institutional or retail, on planet Earth was willing to pay 67.84. How do I know? Because the chart tells me so. It's right there. Gold. Here's where we opened last night. Dropped to the BBC. That sent us up to the weekly zone. That resistance sent us back to support, back to resistance. Then we got below the BBC, and we traded down to this low put in early in the session last night. We didn't hit the short target, but the low was put in at the 8 p.m. Eastern 30-minute candle. This was the open at 6 p.m. Eastern. Again, all of our members have these targets 5 minutes before the market opens. So we got resistance at the zone right here, back to back. And then we got support here, double bottom here, here. And then as red and falling turns to blue, off we go. This was 8 o'clock this morning, 8 a.m. Eastern. Now, notice on this big move up how the black step line and blue and climbing are running parallel to one another. Right here, the story changes. The black step line crosses blue and climbing. When that happens, we anticipate a retracement back to the BBC. Now, we know the pullback holds more often than it doesn't, but we also know eventually it will trade through. If on the next candle, if this turns to red and falling, then by the time price gets to the BBC, you're going to have quite a bit of red and falling chasing price. Okay? And under that scenario, that just might be the time price or the pullback doesn't hold. So if it doesn't hold, then the next spot for potential support is the top side of the long target, then the zone, and then the bullish cross right here. The bullish cross, that's when the blue line gets above the green line and leads to an extended move. When that happens, the first time price revisits the area of the bullish cross, in this case 5207, that would almost always be good support. Every single time? No. More often than not, you better believe it. So, unless something changes, that's probably going to be the high of the day, and I guess high of the week. Just churning sideways. The world is waiting with bated breath. What's going to happen in Iran? Here's silver. This is where we opened last night. We dropped, and this little area right here. See where you got a wick sticking up and a wick sticking down? Put your horizontal line of your cursor right there. Support to the zone, resistance. Resistance sends us back to the BBC, support. And then the 8:30 p.m. Eastern candle last night took us all the way up to the long target. Keep in mind, you only need 2 pennies in silver to get your goal for the day. So we traded through the long target, and then on the retracement, the top side of the long target became support. And that support took us to this high. Go over here, find your resistance. Resistance sent us back to support. Pull back to the BVC hill. And this is when crude took off, 8 o'clock. Was that crude or gold that took off at 8 o'clock? Sorry, it was gold. Yeah, okay. So get a leg, get a retracement, get a leg. We're now getting a retracement. The black step line has crossed balloon climbing, and balloon climbing is starting to curl over. So again, this could be one of those situations. As you can see, the pullback holds more often than not. Here and here, 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 here. Eventually, it's going to trade through. So if we consolidate sideways one more candle, this is most likely going to turn red. And you'll have a lot of red and falling chasing price down to the BVC. And if that happens, then you might want to look for potential support in this area here, roughly 90.48. And then the top side of the long target. And then the zone, 89.36/37. Now, of course, there are no econ reports over the weekend, but cable news will be all abuzz about what might happen in Iran. Trump is really not one to tip his hand. Gordon, do you? Yes, you do. Yeah. Email Valerie support@cfrn.net and she'll take care of you. So here we sit still on the ES, right on top of that 24% fib extension. Again, I changed the fib extensions last night during the members only workshop, as I've been talking about now for a couple weeks. It was a bit overdue. I posted a chart in the discussion group that shows the previous extensions. Those prices, those important prices, important areas are still valid. But we needed to update the chart, and so I did, connecting this significant low to the all-time historic high to this retracement low. And again, notice that this was October of last year. This is November of last year. And what have we done since then? We've gone up, we've gone down, we've gone up, we've gone down. But we've basically gone sideways. This really looks like a market in transition. Okay? Market's been climbing for a long time. Okay? In fact, there's probably money managers on Wall Street that have no clue what it is to trade a bear market. Should that concern you? Yeah, it should. Find somebody that's traded a bear market if you're paying somebody to manage your money. These fresh faces out of college, they've never seen anything but a bull market. They will literally fall apart if the market starts to drop. So you want someone who is seasoned and has a steady hand. So you got to do your own due diligence, and you got to pick that person, whoever that might be. Okay? And if you do it yourself, well, this thing, we spiked this double bottom on November 25th, 1st of last year. Now, this is the 24% fib retracement, way down at 65.45. I talked about this at the beginning of the broadcast. I covered all the markets in granular detail. So if you missed any part of today's broadcast, any of the early commentary before Michael joined us. A few minutes after I sign off, just go to youtube.com/CFRN and you can watch all of today's broadcast in its entirety. So watch where we close today. Do we close above the 24 or below? If we take out the low of the day, we got potential support right here. Basically 68.30. Yeah, 68.29. And then here, 67.91. And then you got the zero line. Yeah. And then we got the zero line down at 67.50. Okay. Remember, prices drop faster than they rise. It takes financial commitment for price to rise. But for price to drop, all that has to happen is for the institutional traders to hit pause on the buy side. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member and she'll send you all the information you need to get signed up. Let's wrap this week up with our good word for the day. Be the master of your debt. Proverbs 22:7. The rich rule over the poor, and the borrower is slave to the lender. Yes, Jeff, that's the 24% Fib retracement. Good credit establishes your future buying power. But when you misuse debt, you experience anxiety each month as you pull the envelope from the mailbox with the credit card bill that says you've spent more than you can afford. And what about the unexpected challenges of life? Your car needs a new transmission, or you need a medical procedure that's not covered by your insurance. The things you buy don't just cost you money. There are other less tangible costs, such as your peace of mind and your sense of security. You forfeit these things when you continue to live beyond your means and throw good money after bad debt by taking out interest-only loans, no deposit financing, and other seemingly easy financing options. Like a juggler, you keep the plates in the air by making the minimum payments each month, but eventually you get tired of the stress and the plates begin to fall. You borrow money to stay afloat and then spend sleepless nights wondering how you'll be able to keep up with the payments. Your embarrassment only compounds the situation as you hide your financial problems and try to just put on a good face, cutting yourself off from the help you desperately need. If you're in debt, what's the solution? Number one, identify the emotions that led you to purchase items you could not afford in order to fill some unnamed hole within you. 2, live on a budget. There, I said it, the B word. Proverbs 21:20. There is desirable treasure in the dwelling of the wise, but a foolish man squanders it. So number 3. Number 1 was identify the emotions that got you in this mess. Number 2, live on a budget. And number 3, develop a plan today for getting out of debt and stay out. That's our good word for today and for a peaceful life. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.